7th floor.
We'll see you around the timeline. Feels good to be back.
I think The Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here on the Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry, come together for the roll-up.
The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
Welcome to the nest. See you on the show. Clap it up. Give me some sound effects. Happy Friday, everyone. Happy Friday, and shout out to you for not running it up to 45 billion and then losing it all. Hello and good morning and good afternoon to everyone, especially Leopold Aschenberger. Much love. It's been a fantastic week. Hope you guys rocked with us during our in-person stream live from Las Vegas. The Aria Hotel put on tremendous event. I mean, you guys saw the lineup that we had. Started off with Bitwise and then just continue to run all the way through the AI portion of the show and then into the Clarity Act. Guys, I mean, if you missed the show, there's a bit of an Easter egg there at the end of the show. Do not buy anything that guy was selling, but man, absolute tremendous times in Las Vegas. Had a fantastic time with the team as well, and just overall great vibes. First time in Vegas, probably gonna be the last time for quite a while. So we're in Florida today, and we're keeping it real. So we're gonna get into today's show, another fantastic show to close out the week today. As we mentioned, Leopold is sort of the talk of the town. We're going to be going over it. We didn't stream yesterday. We were traveling back from Vegas, and so we're going to cover it today and what this means for the market. And we're going to get into all of the great guests we have. Zaki is going to tell us about the Zcash Ironwood upgrade. Plenty happening there, and Ironwood did go live. And then we've got Bill. We've got HYPERMEAT, our local Hyperliquid spokesperson. And then we're going to hear from Steve Chung live from the Block, Mr. Block himself. So we're going to get into it today. Obviously, shout out to Plume. These guys are sponsoring the tokenization tower. Today we're in Florida, but the office in New York is humming. And today's topics are powered by Trezor. You guys heard all the great guests that we have today to wrap up the week. And it is the last day of July. So we're going to wrap up the month as well. And we're going to see how things are reacting to the Citadel purchase, acquisition of Leopold Situational Awareness Fund. Guys, let's keep the show moving. Shout out to Frax. Frax is open, stable, and borderless money. We had a tremendous stabled up segment with Sam from Las Vegas. Frax is based in Las Vegas, and these guys are doing incredible things, spending a lot of time there, working a lot with those some of the larger businesses. We're going to hear a lot more about that. He also had a great story about the Secretary of State in Vegas, and so or in Nevada, and plenty happening there. We had a really great conversation about how these governments can make more money from stablecoins, as well as these consortium models for stablecoins, Global Dollar Network, Open USD from Tempo. There was a lot of kind of posturing about how these institutions are viewing the stablecoin space. Visa, MasterCard are getting involved as well. And so check out Sam live from Vegas on our stabled up segment from this week. Today's weather, powered by Relay as always. We had about 110 degree weather out in Vegas. And Relay, man, when the market's hot, Relay will take you where you need to go. It's 87 degrees in Florida, and it feels warm as well. Very good times happening here in Florida. Freedom Guy, I did not hang out with Ellie after the show. I think you have a bit of a crush on Ellie. Eleanor is a friend of the show. Shout out to Crypto in America. Freedom Guy in the chat. Man, I hope you find love, man. Let's do it. And I'll put in a good word with you with our friend Eleanor. Let's keep the show moving. Love you guys out there. Keep it moving in the chat. Let's have a good day. Let's have a fun stream. Hit me up with questions for our guests and what you guys are thinking about the markets today. Let's keep it moving. Shout out to Denari. Guys, big things happening in the tokenized equities world. This is a massive market. Everyone wants to get some market share in this market. Tokenized equities is $1 trillion TAM. And Denari is doing incredible things. We're also hearing rumors about maybe Ondo getting acquired. They were kind of eyeballing that. They had some unfortunate things with their founder as of recently. Greg, thank you for asking my blackjack results. I did end up walking out of Vegas a winner. This is something that most people don't end up doing. I originally got into crypto via poker. I was playing online poker. Excuse me, I was playing poker at my local casino in South Florida. And my friend said, hey, you can play poker online with Bitcoin. So I started doing that. But I did play some blackjack out there in Vegas, had a good time, walked away, nothing crazy, a few $100, and ended up green. So I was selling the top there, which felt pretty good. We've got some news. Fed's barking. Don't know if I would have voted for higher rates this week. And so, guys, we're reacting to inflation in real time. Fed's barking says it's a close call whether rates are high enough to bring inflation down. It's a close call whether rates are high enough. Don't know if I would have voted for higher rates this week. And so we're seeing this play out in real time. I mean, just incredible things taking place. Fed's barking says it does not feel like a tight labor market. So we may or may not see these things take place over the coming Fed meetings, but we did have the Fed meeting on Wednesday. And so this was a pretty significant development. They decided to hold rates steady, okay? And so that was a pretty important development because that meant that, look, going into the rest of the Fed meetings here, there's going to be quite a few things that we're going to be watching when it comes to inflation. We don't know how the war is going to react. We see the markets today powered by Zama. Bitcoin, ETH, Solana, Chainlink down. Bitcoin broke down below 63. ETH is still hanging around that level where Bitcoin was 64, 65. So I think that if we were to pull up the ETH Bitcoin chart, it's still looking pretty promising. Near having a great day today. Green while the rest of the market is red. So these are the things that we're watching, guys. And I do think Bitcoin is now becoming decoupled and decorrelated from the rest of the equities market, whereas the rest of what we see here, especially aside from ETH, Solana, Chainlink, Near got hit pretty hard when all the AI memory stocks were getting hit pretty hard. Those are obviously bouncing today. And so now Near is recovering along with some of those AI stocks. Just a lot of volatility happening in the equities market, which we'll get into as well. Markets, as always, powered by Zama. Zama is on an absolute tear, and we anticipate privacy tech here at the Rollup is going to just continue to charge forward. That means Near, Zama, Zcash are all in a position to do incredibly well. Big shout out to Zama. These guys are doing fantastic. We had a great quarter two summary around Zama. Freedom Guy. On Ondo, I did say I saw reports that they are potentially eyeing an acquisition. The big question in that world was, hey, if someone like an Ondo gets acquired, what do the token holders get as a result of the project getting acquired? What ends up with the token? Obviously, there's so many token holders, but what happens to them? And from the previous examples of teams with tokens getting acquired, there's no precedent for value to flow into the token. That may be different with Ondo, but it remains to be seen. And so that is a big question in that world. Regardless, tokenized equities are a massive category that we anticipate are going to continue to rise. Let's keep things moving. First, let me tell you about Near, AI super cycle partner and exclusive AI team. These guys are just absolutely crushing. You saw how they're doing in the markets, bouncing with the rest of memory and the rest of the AI equities. They had a 1.0 release of their Iron Claw product. I anticipate Near is going to be one of the leaders in the cycle. They've also got Near Intense. This is a revenue driver to the Near token. I believe they're buying back a significant portion of the revenue that they have happening on the Near Intense protocol. Big shout out to Near, our exclusive AI partner. This also happened earlier in the week. Coinbase plunged 7% after posting worse than expected earnings. These guys missed the mark. I think they had 2 consecutive quarters of down revenue. 1.22 billion in quarter 2 2026 revenue, below roughly the 1.3 billion estimates, and posted a $359 million net loss, unfortunately. Shine, 00, all the good projects will be bought out, leaving crypto in the wind. Well, what seems to be happening is that the bad companies, if you have good projects, bad projects, the bad companies are getting acquired by the good companies. And so that's what we're seeing play out in the market. the industry is still going to survive. I mean, this is just one of the most bullish bear markets that we've ever had. If you're not looking at the prices and you're just looking at what is happening underneath the surface, we see tokenization, we see stable coins, we see all these things. Coinbase, unfortunately, is getting caught in this apathetic market cycle. And this is terrible for exchanges. Obviously, exchanges like Coinbase, also like Hyperliquid, Lighter, the rest of these perps exchanges, they profit on volatility. They profit on volume. Without volatility in the market, whether that's up or down, volume goes down and revenue for exchanges goes down as well. And so the stock fell from 165 down under around 153. 20% industry decline in spot trading volume signals, look, we are in the apathetic part of this market. There's no doubt about it. I do think that we have seen all of the capitulation in this market. Months ago, we were looking at equities and we were saying, hey, once equities correct, that's when crypto is going to really see some upside and react the quickest. It's typically the fastest to react to liquidity conditions in the market. And now that equities are correcting, we may very well see the bottoming out and the reaction from the crypto market, as it does tend to react the quickest. I do think that we may have further downside in the equities market. And so we might have to wade through some of these liquidation cascades, work our way out of the commotion in the equities market. That might continue to correct for a little while, but I do believe Bitcoin and the rest of the altcoin complex will react the fastest to improving liquidity conditions and a bounce. We just don't know how deep this pain is going to go. Let's keep moving. Coinbase, we're going to make it out of this apathetic market eventually. Next up, we've got Flood, who is arguing that crypto traders piling into memory and semiconductor stocks may have marked the top for the trade. I mean, certainly. The top is in on memory. I mean, that is just, we've seen the Christmas trees in Micron. We saw them in SK Hynix. Leopold had massive positions here. This may have been accelerated by Ken Griffin at Citadel, kind of spooking into higher rates. But ultimately, Leopold got liquidated. There was a margin call. He had to sell off his assets in a fire sale. The reports are that he sold off his situational awareness public book to Ken Griffin at about a 50% discount, but that is unconfirmed. It might have been closer to like 20%. We don't know, but we will see. And let's see. Yeah, that's the top on memory. I think there's really no doubt about it. And so now it's just about how deep does the equities market correction go and how quickly will we see it recover? Obviously, Bitcoin tends to be the quickest to react to these improving liquidity conditions. And so once we start to see equities correct, if you're just then buying Bitcoin and digital assets, it's probably too late. So there is a sense of urgency now. I think the fact that we're seeing the equities market correction happen right in front of our eyes, Leopold getting liquidated, is quite the bottom signal. Not to say that this is the bottom buy now, but there is starting to feel like a sense of urgency in this market as a result of what is happening in the equities market. Let's continue to move quite along. We've got a lot to get through before our first guests. But first, shout out to 1inch. 1inch, you might not have heard this concept of shared liquidity flying around, but products like 1inch Aqua let you approve one wallet balance to back multiple positions at the same time across pairs, ranges, and chains. You're not splitting your tokens and you're not depositing them. This is what I find fascinating about this Aqua protocol, but you're not leveraging either, right? It's a totally different way to keep your liquidity active in more markets. If you want to know more, check out 1inch.com/Aqua. I find it fascinating because your coins actually stay in your wallet, but you're still providing active liquidity. It's effectively a token allowance that they can use to pull coins out of your wallet on demand, which means that you can continue to use the coins in your wallet as you would typically do unless there is a reason to provide them as liquidity. Pretty fascinating mechanism from a true OG builder in the Ethereum space. All right, Haseem here says, weird but true. Without crypto, the current AI boom would not have been possible. Today's data center build-out would have been impossible without Bitcoin and miners spending a decade building the know-how around power sites and scale in remote locations. I completely agree with Hasib's take. I was chatting with Todd Alt, who is the founder of the Alt blockchain. This is part of like a whole big consortium that they have. They got hotels, whole big conglomerate that they have. It is publicly traded. I think the ticker is GPUS, and he's working on restructuring these companies so that's a little bit easier to understand. But the one part that I really took away here from this stream in Vegas that we did together was that he had a Bitcoin mining operation that is now pivoting towards AI data centers. This thing is on pace to generate like $3 billion in revenue. It's absolutely incredible. And the data center is only at like 17% capacity. And so what Hasib is arguing here is that we're now repurposing so many of these mining sites around, because they already have the power, they already have the scale, and they're operating in remote locations. So they needed the electricity there. And so now what's happening is that they're repurposing a lot of these Bitcoin mining sites and turning them into AI data centers. And the fascinating thing that I heard from Todd Alt was that it is so much more profitable to mine AI tokens, right? Rather than mine Bitcoin. And we walked through some of the numbers. Obviously the mechanism at play here is that, miners are going to pivot off. They're going to leave the Bitcoin network and they're going to start to provide their compute to the AI data center, providing, compute for these frontier model companies. What that means is that as people and companies leave the Bitcoin mining network, the difficulty is going to adjust. It's going to become easier for these companies to mine Bitcoin, and it's going to therefore become more profitable. And he said, even with the difficulty adjustment, it is not even close to the level of profitability that they're currently seeing, contributing their compute to AI. It is fascinating. It is absolutely fascinating to see. Data centers are just continuing to cause quite a stir narrative-wise in the US. People are saying that they're coming from our farmland. They're causing too much noise, taking too much water. A lot of this is getting caught up in the political rhetoric as well. And so there's kind of this like stirring, like anti-AI rhetoric that's also tied into these data centers. Like the physical presence of AI is becoming a lot more disturbing than maybe the digital presence of it. It's much easier to avoid. But this is all getting tied together. So it is fascinating to watch. I think this is also potentially contributing to the negative market conditions in the AI world. This is all a narrative game. And so we're continuously seeing how momentum is now decelerating in the AI markets. Eventually, this deceleration is going to lead to a correction. This is what we're seeing play out. There will be liquidations. Leopold is probably not alone. And just a matter of time. Just a matter of time. It's very cool, actually, to see again that Bitcoin and digital assets are just one step ahead in the cyclical nature of these markets. Obviously, after capitulation comes apathy. I would argue that Bitcoin and digital assets are currently in apathy, and we're now just seeing capitulation in the equities market. So, once we start to see equities transform into apathy, that's when I would expect Bitcoin and digital assets to do quite well in terms of a recovery. All right, let's keep moving along. This is something that we're continuing to watch, and Hasib points out exactly this. It wouldn't be possible without those mining companies already in place. Here's Citrini. Imagine for a moment, you're an LP in Situational Awareness, the fund that launched on a pitch that was essentially AI is the only thing that matters. And if you recognize that and wish to be invested in a vehicle that will express that view by getting massively nips to nuts. Yeah, that means tons of leverage. I think we're levered up 4x on $45 billion, which means that their notional volume was something like 120, which you can deal with, right? If you're, say you take a 25%, downturn, and we'll hear a little bit more about this because Martin Shkreli puts this in, Martin Shkreli, yeah, that guy, puts that in pretty good, easy to understand terms. Citrini says this was immediately wrong, but at least it still looks like Leopold was indeed about to cause the bottom. Citrini seems to be calling bottom. It's funny that Citrini put this out maybe 2 days before this guy got liquidated. Like he said, immediately wrong. But that's effectively what we have here. Citrini is one of the best in the game, always open-minded, admitting his own mistakes. Pretty important that we see. So let's continue. Because we want to cover I think we've got just one more before we get a little bit deeper into situational awareness. We bring up our first guests. Jason Yanowitz, big shout out. There's a sea of change happening right now with investor relations. Old school IR is stale. Trad decks, conference calls, no more in this world. New investor relations, exciting podcast streams, investor days, deep involvement of the poster class. Get on board or underperform. Here's Vlad. He says, when I listened to my own company's investor presentation, I was bored. And if I was bored, everyone was bored. Guys, this is exciting. Blockworks is doing great in the investor relations space. They know what they're doing with this regard. We also are excited to provide a platform for companies to join and express how things went in the previous quarter. And you heard Zama, come on last week. They did a tremendous job in quarter two, and we're very, very excited to hear a lot more about this. I think it's a lot more dynamic. We can get the chat involved. You guys chime in. You ask questions. You guys had actually some great questions for Zama, and we really, really appreciate you guys chiming in. I think the rest of the founders of these companies appreciate it as well. Guys, first and last, daily equity. And that is our final segment before we bring up our first guests, Zaki and Sudo, to talk about Zcash's Ironwood upgrade. Let's get into daily equity so we can chat a little bit more about situational awareness. This is what you guys want to know about. And then we're going to bring up our first guests. All right, so we're going to play this clip. Martin Shkreli, actually, you guys probably know him for the pharmaceutical, debacle that he had, price gouging and whatnot. He also, bought that Wu-Tang album and then never released it. So very strange guy. He's been involved in pop culture, but he's also been in finance for almost his entire life. He puts what happened with Leopold into perspective. And so we're going to play the clip. He does a great job. This is coming from the TBPN podcast, and we're going to cover a little bit more about the situational awareness before we bring up our first guests.
Right. So I'll give you sort of an example, and you're asking the question. So let's say, you're at 45 billion, to sort of try to trace this back.
Remember,
and
Leopold
you're
500
10 billion of that is
billion?
in Anthropic, from what we understood. So you have $30 billion of cash in your bank account. And running 4x levered means you have 120 billion gross market value.
Oh.
So if your GMV drops, 25%, that doesn't sound so bad at 120 billion. Maybe that's, 30 billion. So you're down to 90 billion, but that's not your equity. So your equity drops from 35 billion to 5 billion.
Yeah.
And no prime broker is going to let you keep 90 billion of gross market value, because once you dip your equity below zero, it's their loss, not yours. Mm-hmm. And they're not going to lose a penny after Archegos and after these other kind of blow-ups. And that's not their job. And they kind of have the right to take over your portfolio, which is sort of, something I hope nobody ever has to experience. But they basically call you in and say, listen, these are our assets now. Yeah. And, we're going to decide what their disposition is going to be. And the rumor is over the week.
So this was effectively what happened. This was obviously a development that played out over the last couple of days. This guy was 4x levered. There's just incredible lore around this guy as well, Leopold. He is engaged to, I believe it's the CTO of Anthropic. I don't know if I got her role right, but they were planning on getting married. I think they still are getting married this weekend. What a just whirlwind for Leopold. Guy gets liquidated, sells his assets to Ken Griffin, and then gets married a couple days later. Not sure, might be a little awkward family reunion at the wedding for some of him and his friends there. But and then obviously, as you heard Martin explain, who had some terrific reporting here, and this entire segment is great. Encourage you guys to watch it. Kind of talks through how these deals get done. One, how easy is it to get leverage? These prime brokers are supplying margin, but he was able to do a tremendous run up and keep the momentum going. But once things start to turn around, 25% decline levered up 4x is 100% blow up, and the prime brokers they're going to call you in and make sure that there's still time for you to fire sale those assets. And that's effectively, that's exactly what happened. So I understand now, something came out this morning that, the assets that were sold to Ken Griffin, we don't know exactly what the discount was, but I think it was somewhere around 50%. So Ken's just massive win here. But it was only the public stock portfolio. I think he had over something like, at least 100 million, I think closer to $1 billion of Anthropic stock that did not get sold, and that is going to continue to stay in the situational awareness fund. So, this is the biggest news that's happening here on both the AI side, the finance side. We're covering it here, and we anticipate this is going to send ripple effects through not only the equities market, but also a bit through the crypto market as well. So that's been the daily equity segment for today. We're obviously continuing to watch this, and big winner here is Ken Griffin, who steps in and provides the liquidity, and seems like this is now his role. It's a good position to be in, the lender of last resort when it comes to these hedge fund blowups. He becomes the hedge fund of hedge funds to come in, almost like the central bank, if you will, to come in and buy these assets cheap on the dollar. Guys, let's go ahead to our first guests of the day. We're going to be chatting about Ironwood, the Ironwood upgrade in Zcash, which is very, very exciting because we saw so much happen in the world of AI as Zcash was kind of navigating this. They were able to preemptively use AI to mitigate the risk of any sort of contagion or exploit or vulnerability in the Zcash protocol. The Ironwood upgrade has now been live, and so we're going to get an upgrade on how that's going. We've got Zaki, the head of engineering and board director at Sovright, and we've got Sudo. And so we're going to chat with both of them. Let's go ahead and bring them up on the show. Hello, guys. Good to see you again.
Yeah.
Hi, Zaki. You were on not too long ago, and Sudo. It's I think your first time on the show, but it's a pleasure to have you. Sudo, maybe we could start with you because it is your first time. Would love just a little bit of an update on how you ended up and how things are going, and we'll get into Zcash and Ironwood's upgrade.
Sovright. I first started working with I first met this ECC team in 2018, including Zuko at the time, when I was head of BD at Anchorage. And then in 2021, I joined the first ever Zcash Community Grants panel. And then in 2023, I joined the board at ECC then, but in June, we renamed to Sovright.
Very cool. Awesome. And Zaki, you wear many, many hats around the ecosystem. We most recently had you on with our near friends. And now we're here talking about Zcash. I know you've contributed all across the board. For the sake of this conversation, we're going to be focused on Zcash and Ironwood, but maybe you could just help us understand what your involvement here is with Sovright and Zcash generally.
Yeah. So I think even before like cryptocurrency, I've been very interested in privacy. I sort of co-founded this privacy nonprofit called Restore the Fourth. I have been, and then in 2014, Aaron Schromer gave a talk at my Bitcoin meetup, about Zero Cash, which was the original, which was the paper that Zcash was based on. And I'm like, I don't understand what you're talking about, but this is magic. This is witchcraft. How is this possible? How can you prove arbitrary computations in these small proofs? That doesn't make any sense. And so I was like, I have to learn how this magic works. And so, learning about how snarks worked and all of this was a huge sort of guiding light in my learning about cryptography. So, people, mostly know me for my Cosmos things, but do various other stuff. But learning how snarks worked and contributing to Zcash has been something that I have been doing basically since Zcash launched. So one of those roles has been being on the board of this organization that is now known as Sovright, and have been doing this since 2021. Now we're just sort of building infra.
Fantastic. Yeah, I want to talk a little bit more about the infra that you guys are building specifically. But before we do, obviously Ironwood is kind of, the front of the focus here, given that it went live very recently. I mean, as I understand it, there was sort of this potential vulnerability, but it was discovered because AI was deployed onto the network intentionally to preempt anyone else from finding this kind of even potential vulnerability. And we had Josh Swihart and we had Mert also on the show kind of talking us through over the last few weeks as this situation was developing. And so the idea was that this pool would go live and we would migrate funds from the old Orchard pool to the new Ironwood pool. And by doing so, if all of the funds were migrated, we would know that there was no infinite mint. And, all of the funds that migrated would effectively be, removed from the potential vulnerability. Maybe you guys could just correct anything in the context of Ironwood, and then also tell us, what this kind of like a technical undertaking such as this one, we heard a lot in the build up to the upgrade, but tell us actually on upgrade day, what happens on a more granular level?
Sure. I can dive into those pieces. Okay. So I think things that are important basically to understand is the most recent Claude Opus 4.8 discovered vulnerability in Zcash was not the first of these vulnerabilities in Zcash. Basically, I think as long as I've been involved in Zcash, there has these infinite mint vulnerabilities have come up. And I think what was cool about this, so Ironwood is the combination of existing Zcash mitigations, which is this turnstile concept, which is basically the amount of money that goes into a shielded pool must equal the amount of money that comes out of a shielded pool. And we have 4 shielded pools right now: Sprout, Sapling, Orchard, and Ironwood. But then it was this new capability that is basically the Zcash communities, all of the technical contributors, this tour de force of basically never again. And as much as we've in this decade of contributing to Zcash always wanted to say never again to all of the vulnerabilities, and the amount of time of energy into securing Zcash that Zcash has always put has always been just orders of magnitude more than basically any other project that deploys advanced cryptography. We've never been able to confidently say never again. But basically, so AI helped us find this vulnerability, but then AI was also a key enabler to doing this process called formal verification, where you basically generate mathematical proofs that the specification that describes the protocol and that the code that implements that specification are equivalent. And formal verification, I've been part of many formal verifications of various things in my whole time in cryptocurrency, has historically been this huge expensive process, and which take years to formally verify. And in the past, we've looked into formally verifying Zcash's shielded protocol. It just wasn't feasible. What has been amazing is AI has allowed us to do this whole formal verification in 2 months. Basically, it's this, on one hand, we had this capability get created, which was found this vulnerability that had been latent in the code for 6 years. But then the same AI capability allows us to truly do this Ironwood thing, which is the never again, basically, reality of the situation. So we have something that is just unprecedented in the level of confidence in the basically in the supply of Zcash and in the integrity of Zcash going forward now.
I'd like to emphasize that it took a grand total of 1 day for us to find this bug. So it's existed for a while, but security engineer, security auditor Taylor Hornby, who was engaged by Shielded Labs, he received special access to this version of Opus, right? Zaki was Opus, right?
Yep.
And then within 1 day, he's like, "Oh, guys, I found a thing." So it was something that was discovered and then closed very rapidly. I just want to emphasize how incredible that was and how short the window was.
And I think it signals to the rest of projects, companies that are taking, their protocol seriously, and they're looking at AI, and they're seeing all the hacks out there, and they're thinking, how can I protect myself against this? Well, take a page out of Zcash's book here, and deploy these tools to prevent anything like this from happening. And there's really a sense of urgency to do this now, because these tools are becoming open and available for everyone to use for good and nefarious purposes.
But it's also really important to realize that the only reason Taylor could find it in one day is because he's been doing this for years. He worked at ECC as security engineer a long time ago. So I think we should not understate context and true experience reviewing a thing that is mission critical, even if you have the help of AI tools.
I mean, we could talk about this for a while, because I understand what you're saying, Sudo. There is, deep technical knowledge and experience that goes into this. There's also people that are out there solving like Jacobian math problems that have been 80 plus year math problems, and they're like, go make a scientific breakthrough, make no mistakes. It's fascinating, like the pace of innovation here, and it's just incredible to watch. Regardless, this Ironwood upgrade did go live. And so I'd love an update on how it's going. I believe it went live on July 28th. So we're about 2-3 days in. And so is what we're watching now effectively the migration of funds from the old Orchard pool to Ironwood? How are we? What is kind of the status update on the flow of funds out of the Orchard pool? And what is it signaling to us thus far?
Yeah. So there's this block explorer for Zcash called CipherScan app, and they have basically the best dashboard. I don't know if you want to try screen sharing it or not.
CipherScan.app. Cipher with the CI.
Got it.
CipherScan.app / and then there's a /Ironwood is their analytics site.
Okay.
Yeah, I don't know how annoying it is to spring this on you right now, but it's like I could take you through the graphic, and I think it would be cool. I don't think anyone has done this on stream so far.
Okay, I'm gonna pull it up, Leo. Let's see if we can get it on the screen.
Yeah.
I know you guys can see it in the meet, but just give us Zaki. Why don't you just start explaining at a high level while we pull it up for everyone else to see?
Okay, so what happened with Ironwood? So we did. Zcash regularly undergoes hard fork upgrades. It's been part of the culture of Zcash, sort of like Ethereum in that sense, where like there's already planned in a well-oiled system of doing a network upgrade. So when a network upgrade goes live, the consensus rules change. Everybody has to deploy new software. So what this did is it made it so you could no longer put funds into the Orchard pool. So the Orchard pool turnstile is essentially paused in one direction, and funds can only flow out. And then there's this new Ironwood pool. And so then the question is like, okay, so like there's like sort of, I would say, if I remember right, there was like almost 4 million Zec in the Orchard pool.
Okay.
When the upgrade went live, and so then there's this process. So now, as a user, you don't have to do anything. Like, we don't believe that there's any sort of massive, urgent reason to migrate your funds. But as a community thing, migrating the funds to Ironwood does demonstrate, I think, an increased level of confidence that like the vulnerability that was found in the Orchard pool was never exploited. And so what we're so wallets have to participate. So so wallets have to participate in the migration process. And so several of the wallets in the Zcash ecosystem, the Cake wallet, which is this wallet called Wiser, have deployed automated migration systems that basically you update your wallet and you're able to in the background able to do this. The most popular wallet in the Zcash ecosystem is the Zotto wallet, and it currently does not have any sort of automated migration associated with it. or like implemented within it. It's planned. But we've been basically migrating about 10, like 8 to 9,000 Zec, 8 to 10,000 Zec an hour, basically since the migration went live. Ironwood is now the second largest pool, and everything it's all going as intended. And I think that the pace of migration has been really good. It's actually been, I think, quite surprising how the pace of migration has been, and how many like sort of large accounts have migrated, or large amounts of value. So basically, when you migrate, the network doesn't see any addresses, but what it does see is the amount that was migrated in the transaction. And so the automated migration systems have all of these privacy things that are built in, that are designed to sort of not really to leak as little information to anyone who's observing about who is migrating their funds. So, standard denominations. So like, we'll migrate, we migrate 10,000, 1,000, 5,000, 100, 55, 10, 0.5, units of Zec. So like you migrate in standard denominations, in all of this automated software. So if so you can see there the size of the Ironwood pool has been steadily growing.
Upwards of 600,000.
Zcash. It was like 500,000 this morning when I looked at it. So
oh wow, okay.
It's moving. So it's like about 10,000 an hour. But if you scroll down, okay. So
oh wow, okay.
This is a 14. Cool animation, but like actually not that information rich. And then scroll down a little bit further. That's also not that interesting. There's like one graphic I'm trying to get to that is like the cool one.
Just one comment here is that there's Orchard, obviously 500,000 plus Zec coming from there. That's most of it, but there is 100,000 Zec of the 600,000 in Ironwood that's coming from Transparent and the sapling.
People are coming, like old funds, sapling funds are being migrated. This is the shielded. Sorry, go ahead.
Yeah, sorry. To be clear, only people with funds in the Orchard pool need to do this, or should be, are heavily advised to do this migration. If you had Sprout, if you had sapling shielded addresses, you could choose not to migrate. And if you had Transparent, then you definitely don't have to do that. But as you point out, people are migrating from Transparent into shielded Zec.
Yeah.
This is a gold. I mean, this is the gold standard private pool in crypto.
Mm-hmm.
So this is like the rate of migration, which is sort of interesting. It's like, it's spiky.
I'd imagine that, now that it's just a bit linear, right? There was no incentive to get in as soon as it went live.
So this is what I think is really cool. This graph at the bottom with the dots. Okay. It's okay. So so basically we have three colors of dots: green, orange, and red, for people. And as you see, there's like this population of green dots that continues to go. So basically, if you're the wallets that have the fully privacy enabled automated migration are generating the green dots. And then you have people who are manually migrating who are generating the orange and red dots. So a red dot is basically just like full send your wallet to upgrade to Orchard, which is basically all you can do in Zottle right now to like, if you want to like fully upgrade all of your funds in Zottle. Hopefully Zottle will be producing green dots in the future. But then you have orange dots, which is just like also manually sending, but only manually sending, basically 10, units, standard units of Zec. And then you have the sort of like maximum indistinguishability green dots. But I think it's just like really cool as like kind of, how the wallet ecosystem in Zcash is evolving, how different wallets have like gotten these features deployed. And hopefully as time goes on and as we migrate more to the pool, we see more green dots. There's a lot of speculation in the Zcash community, I think, about how quickly migration is going to go. I'm pretty hopeful that we're going to see, I don't know, within the next 30 to 90 days, like basically the entire Orchard pool empty out.
Shout out
And-
to Ken Back who made this. I think this is the most beautiful dashboard we've ever seen. This is one benefit of people showing interest in Zcash again.
This is very cool. I mean, it's indicative of like the early days where anyone can come in, anyone can contribute. It feels more like a decentralized community of contributors than even Bitcoin does these days. And I think that is indicative of a lot of the core ethos and why people are taking an interest in Zcash. And so can we definitively say now that there is no infinite mint, there was no counterfeit Zcash put into the ecosystem? And if not now, when will we be able to see that? What are we watching out for?
So I think there's two questions. So one question is like, if you hold Zcash in a shielded pool, in the Ironwood shielded pool, do you hold that Zcash, and is there no infinite Zcash out there waiting to debase the Zcash that you hold in the Ironwood pool? To that answer, we know that definitively now. If you hold Zcash in the Ironwood pool, you definitively hold that Zcash, and there is no excess supply coming. If you haven't yet migrated from Orchard, there is some low probability that and basically as every day of this migration goes back, that probability that there is someone sitting there with an infinite amount of Zcash in the Orchard pool goes down every minute, every block that gets made, and every ZEC that gets migrated. And so I think at that point, I think as you get crossover and the Ironwood pool becomes the largest shielded pool in Zcash, basically just everyone will have confidence, and there will probably be lost keys and stuff like that there's some, just like there's still 35,000 ZEC in the Sprout pool.
Can I maybe try and reframe that in more like normal people terms? So if Zaki confirm if true, if every single token, if we forget forgotten keys, etc., if everything in Orchard migrates to Ironwood, and nobody says, oh crap, I could not migrate, I could not withdraw my funds, then we are sure that the bug was not exploited. Is that correct?
100%. That is a very non-autistic person way of explaining.
Okay. And so Sudo, so you're saying that if we would have some sort of community outcry if someone went to go move their funds from Orchard into Ironwood, but for some reason they weren't allowed to, or they weren't able to, their transaction would be reverted.
Correct.
But we haven't heard that outcry. And with every day that passes, it's less and less likely because these people are going to be migrating.
Yes. Yeah. And I think one way to think about it is that there's this term called a turnstile. It makes no sense except to people who work on the protocol or who spend a lot of time studying it. And if you think about if I operated turnstiles for the subway, and every person that went in, I make a counter, and no more people that went in can go out. The moment, everybody that I counted went out, my turnstile stops working.
It's just it's like what a bouncer at a bar is doing, just to keep, everything under the fire code, make sure the number of people who went in and the number of people who went out are the same. Right?
Because there's a record of everyone who went into the Orchard pool.
Of every ZEC that went in, and there's a record of every ZEC that went out. And in Orchard, no more ZEC can come in.
And the vulnerability would be if there was something minted spawned inside already without going in and turning the turnstile?
Yeah.
Okay. Yeah, you can't just magically appear inside the bar to if
So
you're under 21 and
circumvent
the
every
circumvent
ZEC is
the bouncer.
mined, and then it goes through a turnstile into a shielded pool.
Mm-hmm.
So every ZEC that has ever mined does pass through a shielded pool. That's one of the protocol rules. So every ZEC that was ever mined passed through a turnstile.
But each pool has its own turnstile.
Yep. So we knew everything that goes in, everything that comes out, and we can match that up with what is happening in the Orchard pool and the Ironwood pool.
Yep.
Guys, that's a fantastic explanation. I do really appreciate it. I feel like I have a better understanding of the way that this turnstile mechanism works now. And so zooming out a little bit and just talking a little bit more holistically about the Zcash ecosystem. I mean, obviously the fact that this, was discovered, there was this preemptive cryptographic research that was done, and it sort of signals to the rest of the ecosystem that this is possible, and it does set a precedent for the way that we should be thinking about security in the AI or maybe AGI era. Like, this is what I think a lot of people have been missing about like a more institutionalized digital asset world, is, kind of this return to fundamentals, this return to our cypherpunk roots that seems to be happening in Zcash. And so people are taking a really, really strong interest, paying a lot more attention to this ecosystem. What's next? Like, this thing was discovered, it had Zcash was already catching a bid, for lack of a better term. This was discovered. This fix is now put into place. We're going to see this migration happen into the Ironwood pool. Can you guys give us just like what you're now most excited about as we sort of move further and further away from like this era of the Zcash protocol? What's coming up next that we can look forward to? I know we've been hearing about quantum resistance and these sorts of things. What are you guys most excited about?
Yeah, I think maybe Zaki can open with the scaling roadmap, a little bit on quantum, and then I'll talk about what Sovright wants to do.
Yeah. Okay. So I think like one of the other things that has been really cool and just like personally really awesome about what's happening in the Zcash ecosystem is you see a lot of talent, frankly, from Cosmos coming to the Zcash ecosystem, kind of the most diehard cypherpunk people in the Cosmos ecosystem. So like Dev Oja, Evan from Celestia, Tal from Penumbra, have all become like major contributors. Like Tal led the formal verification effort for Ironwood, and just knocked it out of the park, as I frankly knew he would. And so we've had this like extraordinary sort of talent, as people who came to crypto for the cypherpunk things. I would definitely put myself in that category. And basically we're here for a revolution, not just to make fintech backends. And so when we were so this infusion of talent has been driving basically. So I think unlike Zcash, unlike Bitcoin, which sort of went it down we are just going to be like digital gold. We are going to give up the peer-to-peer electronic cash vision. There's this design, there's basically this like talent plus, the Sean, who used to be at ECC and is now leading the Tachyon project. So there's this thing called Tachyon. But basically there's like a collective, we're going to make, Zcash scalable. We're going to make it super scalable. And frankly, just given how well we just executed on Ironwood, it's just like seems obvious that like the design, like all of this will get done like very quickly.
Well, maybe you can talk about
Zcash.
why we have scalability problems.
Okay, I can talk about. I mean, my joke about Zcash is Bitcoin has two problems. One is scalability. The other one is privacy and fungibility. Zcash solved privacy and fungibility, but made scalability worse because like currently Zcash does about 2 transactions per second. And so, but like this, I don't, you could do a whole episode talking about Tachyon, but basically like this design of the system.
We probably will.
This design of the system called Tachyon is basically enables to have a thing with the privacy properties of Zcash, but like Visa scale transactions per second is like sort of. And so, I think that like one of the things that like Zcash wants to fundamentally be right now is we want to have the scalability on chain to deliver peer-to-peer electronic cash at internet scale. But then also have the organizational structure that like delivers that and provides privacy and all of this stuff around it so that like, this is what we actually give to the world. And it's kind of, I don't know, it feels to me like we're finishing the Bitcoin mission.
Yeah. Very cool.
One
Sudo,
thing I'm
please.
super excited about, I can't talk in depth about it, but our core engineers have been worried about post-quantum for a number of years now. And we do have a sort of plan. The first thing on the plan will not solve the problem, but it will make it a lot easier to solve down the road.
The
And
first thing on the plan is also shipped in Ironwood. Every single transaction every single migration that goes into Ironwood, like you could go into the Ironwood pool, like migrate your funds into the Ironwood pool, and then like put your keys in a safe and like go away for 50 years and your money will still be there. And there's not a lot of cryptocurrencies that can currently offer.
Can you explain that?
Well, yeah. So without having to make any protocol changes, it's again a wallet side change, but all the wallets that are supporting Ironwood are all using this basically doing this thing called quantum recoverability, which basically means that in the future, when a quantum computer is determined by the Zcash community to be a significant enough threat, that it is time to disable all the pre-quantum anonymity protocols. So Sprout, Sapling, Orchard all get disabled. You will be able to, using just your existing wallet, make a proof in the future that basically I hold funds in the Ironwood pool that with a proof that is not vulnerable to a quantum computer. So we don't use these proofs today, but we basically have laid everybody who migrates their funds in Ironwood. So it's basically, this is like a one and done kind of thing for people who just want to have their apocalypse money and, wait for the apocalypse.
If I can kind of normal person summarize, it's
this is great.
It's a feature where in the future, when we think, okay, quantum computers are here or will be here next year, you can then press a button and then you can extract your funds at the time an upgrade that is post-quantum secure.
But the user doesn't have to do anything. That's okay.
Oh, really?
The key thing is the user doesn't have to do anything. Like you migrated to Ironwood, Zcash community decided quantum computers are a problem, did a bunch of protocol upgrades. You come back 20 years from now, you're like, where are my money? I have my seed phrase. Your funds are sitting in this pre-quantum Ironwood pool that no one can take money out of anymore without these post-quantum proofs, but people can't transfer funds within it anymore. And you can do a migration, but you can do that anytime in the future.
Wow. Okay. So the wallets will have to be doing this.
Ironwood is like 100-year. It's kind of like 100-year protocol, and we did it in like 2 months. It's crazy.
Cool. Rob, did you get what you want?
Yeah, absolutely. This is fantastic. I think we will do an entire stream on Tachyon when we're getting a little bit closer because there is a lot to dig through. But we already have our next guest ready in the back. And so I appreciate you guys sticking around a little bit over time and explaining to us. And this has been, this is a great tag team because Zaki is like super, super deep, very, very technical. Sudo, obviously you're very technical as well, but able, to put it into terms that I think a lot of people can understand. So this is a fantastic barbell approach that I really, really appreciate you guys sticking around and explaining to us today. Thanks so much, guys.
Thank you.
Go Zcash. We are big believers, and we enjoy that it's returning us to our roots. Thank you so much. We'll see you guys next time. Okay, we've got our next guest that is coming up, and we're going to get back on schedule here. We've got Bill in the green room now. Let's go ahead, send him in to the live room. We are ready to get Bill up. Guys, Zcash is kind of the talk of the town amongst like the privacy world of builders and cryptographers, like people that get it, like they're all excited about Zcash. This is what people want to learn about. This is what people are excited about because this is ultimately where the pinnacle, like the bleeding edge of computer science and cryptography is happening. It's happening on Zcash. It used to be the case that the bleeding edge was happening on Bitcoin. But now it really, really seems as if Zcash is where a lot of this action is. And so we're going to chat, great episode with Zaki and Sudo. All of the action does seem like when it comes to the cypherpunk ethos, the bleeding edge of cryptography, so much of that is happening on Zcash. You guys heard obviously about the ZK approach. Obviously, this is baked directly into the protocol, but that is in addition to all of the quantum resistant cryptography that they're programming in. Obviously, they had this turnstile approach with Ironwood, and it does seem like with the Tachyon upgrade, they've got the privacy. They are able to shield. Everything is confidential. Now they're bringing scalability up on par. They said with the Visa network. So obviously turns what is currently like 2 transactions per second into something you can actually use as a medium of exchange, as money. Very, very cool to see. And I'm excited. I'm a believer in Zcash. We're going to bring up our next guest, Bill, the CEO at Abra. And we're going to be chatting a little bit more about clarity and yield. Bill, welcome to the show.
Good to see you. Thanks for having me.
Absolutely. Thanks for being here. Bill, you're founder of Abra, regulated crypto wealth platform focused on high net worth and institutional clients. A lot of turmoil out there in the markets these days, a little bit of a bear market in crypto for the last few months. And now seems like things are hitting the equities markets as well with the old Leopold liquidation we saw over the last couple of days. Could you just give us a reality check? How spooked are investors, markets? Do they kind of see this as a bottoming out, or do they feel like, maybe they agree with the one side of crypto Twitter that says, yeah, we've got one more leg down to go and flush this whole thing out?
Well, I would say investors aren't spooked. I would say speculators are spooked, right? So, what percentage of money moves the market in equities or crypto? It's actually a very small percentage, and because it's where the leverage is. And so, Apple down 10% in one day, Amazon up 15% in one day, looks like a meme stock or a meme coin to crypto folks, or Tuesday, if it's COVID for crypto folks. But for equity folks, it's confusing because day to day, they don't really feel the impact of excessive leverage, of a small amount of money moving the markets. And I think that's what's happening right now. And look, at Abra, our goal is not to basically time markets. Our goal is to be a fiduciary for our clients to get exposure to what they want to get exposure to, facilitate loans against assets. It's a very long-term proposition, right? So today it's mostly crypto. Soon it'll be tokenized everything, but it's portfolio management at the end of the day, right? So we're not really focused on the speculator, and that's, like I said, the speculator might move the market in the very short term, but in the long term, the market goes where it needs to go. And I think that the AI trade is not done, not by a long shot. I think it's a generational shift, right? We're going to see the downfall of SaaS as a generic industry and the rise of the machines, as the Terminator likes to say. And so, that is a sea shift in how the ones and zeros get processed. And it's not a smooth ride for sure. There's going to be a lot of bumps along the way. And at the same time, from a macro perspective, something's breaking. Right, so the downward 40-year channel in the 30-year broke during COVID. It hasn't recovered, and it's not going to, in my opinion. Why? Because the jig is up, right? We print money for 45 years and expect that the rates are going to go negative. Is that how we're going to sustain growth? No. Eventually, nobody wants to buy your debt anymore. And that's where we're at now. And we're basically using our position in the world to convince people to buy our debt. Now, that happens to be coincidentally happening at the same time that we're having this generational shift, which in a way could save us because, declining working population could be replaced with robots and AI productivity. We don't know. Will it make up the difference in $40 trillion in debt? Probably not. But it's a pretty complex equation, right? So all of this is happening at the same time.
Is it truly the case here that the only mechanism that like politicians, the powers that be, central banks, the only tool in the toolbox is money printer go burr? Like all they can do is print money to try to pay the high yields as the bond market kind of goes out of control. Maybe as you're talking about, maybe the AI productivity boom saves us. But whether we run the economy hot and get saved and bailed out by AI or not, it seems like the only reaction that they can put forth, whether it's a bailout to print money or if it's printing money to run the economy hot, it seems like either way, they're going to print money and kind of the debasement trade is back.
Yeah, I mean, look, the system has been rigged for 50 years, and it's been rigged against the middle class, right? I mean, in currency and then ultimately price inflation is simply a tax on anybody who's not levered into the markets. And that's the reality. Now, is it the only tool? Of course not. We could do the right thing, absorb the pain, and not pass it on to our great-grandchildren. But that's not going to happen. So, and it's not me being sarcastic. It's simply not. They don't. No politician has the will to go back to their current constituents, except maybe if we eliminated term limits, or created term limits. Sorry.
Right.
But no politician has the gumption to go back to their constituents saying we broke the system over the last 50 years, and we need to absorb the pain to fix it so our great grandkids can have a better life. No one is that message is not going to be understood. Never mind accepted. So it's easier to blame the rich. It's easier to say we don't tax enough. It's easier to say, modern monetary theory, print more money, and we end up with the rise of China and the decline of the American empire. And unfortunately, our best hope, not unfortunately, but our best hope now is, the massive productivity gains via next gen exponential technology, AI and robotics and space and Elon, basically. Yeah.
So we've been seeing this massive shift in that direction, and people have been, allocating their chips and capital in that direction as well. And this has been all the way from retail, kind of shifting from crypto over to the AI equities, markets. It's also taken place at scale with these Bitcoin mining companies.
It's crazy.
Just repurposing these big centers into data centers for the AI build out. Do you feel like this is a one-way? Do you think this is a pendulum that ultimately swings back, or is this a one-way train? And all of the attention that used to be on crypto is now shifted into the AI world.
Well, proof of stake, kind of was one nail in half of the coffin, and this staking is a very inexpensive business to run. So it's really Bitcoin versus AI. It's not even crypto versus AI anymore, unless you're doing other things like, tokenized compute or something like that, which is interesting, but that's just, that falls more on the AI side of HPC. So Bitcoin, look, I think Bitcoin will be fine because given the discussion we just had, the 65,000 price level is not sustainable in my opinion. I think Bitcoin needs to be at 300,000. And just given the demand that's coming right now, the demand has been via US ETFs, and there's very little European demand right now for Bitcoin, which is crazy to me, given what a mess Europe is. And so if old money starts to find its way into the debasement trade and sees Bitcoin as the way out, which I think it will, and the money printing accelerates, which I think it will, then we have Bitcoin at 500,000 and then 1 million. And then at that point, back to your question, mining becomes extremely profitable, right? Mm-hmm. And don't forget, one of the things that's happening as a result of all of this energy consumption is that they're making these systems very efficient out of necessity. Mm-hmm. And that's going to pay dividends for Bitcoin miners eventually as well, because it'll make those Bitcoins more profitable when they mine them. But anyway, I don't think it's cyclical. I think this is a one-time thing because Bitcoin is coming down and we had a rotation into AI out of the ETFs in some cases. So as Bitcoin goes back to new highs in Valhalla, which is inevitable, I don't see how it's not. I mean, obviously I can't say it's 100% certain, but what's the alternative? We get our act together financially from a macro perspective and all of a sudden run surpluses and pay down debt and, go back to a commodity-based monetary standard. I just don't see it happening.
I agree with you. I think there's a couple things that I want to bring up here. One of them is, you make the point that, this is ultimately going to become a lot more profitable for AI miners, for Bitcoin miners as this, price increases. Yep. We in the news section of the show, we were reading a tweet by Hasib who said that the AI build out would not have been possible if it wasn't for the Bitcoin mining companies, because they were originally the ones that they built out electricity and power in some of these rural areas. And now we're learning from a lot of that. You make the point that, and we say on the show sometimes, the casino funds the research lab, which I think is true of, kind of what we're seeing in the prediction market space and, some fun things that are happening over there. But it's also true that, these two industries are learning from one another, and they're ultimately both benefiting from the more efficient power that we're generating as a result of learning and building out these systems for our own benefit. Everyone can end up reaping the rewards of that build out. I want to get into the how, right? Because obviously, Bitcoin at 500,000 or 1 million solves a lot of problems, including the Bitcoin mining problems. But how do we get there? You mentioned, with the demand that's coming, and then you started to talk about Europe. I'd love to just dig a little bit deeper into that. Why do you see the next net new unit of liquidity in the Bitcoin world coming from Europe? You mentioned it's kind of a mess. I think there's several reasons, we could say that, but I'm curious, financially, why is it Europe that is in the biggest position to benefit from allocating more capital to Bitcoin?
I don't know that Europe is in the biggest position. I'm just shocked that, well, not shocked. I think it's unsustainable that Europe isn't actively participating to the degree that wealthier Americans are. And even Asia, old Asian money to a large extent is on the sidelines. And the rising and falling tide raises and sinks all boats depending upon the tide as it relates to monetary policy, right? And if the US leads the way, why does the dollar look relatively strong in a market where we're running a $40 trillion deficit? Because every other currency is going to shit even faster than our currency, right? And I don't, if I'm a wealth manager, I'm not looking at this like misery loves company. I'm looking at this like I need to protect my clients. They need to protect themselves. And to that end, right, Bitcoin, gold, start to look very interesting. Bitcoin is not a viable gold replacement yet. Why? It's too new. It's too volatile when it's being adopted. When thousands of people own it, it's volatile, right? But when hundreds of millions of people own it, the volatility goes way down. And that's what we're seeing each cycle. The earliest cycles, BitMEX could manipulate the price of Bitcoin, with 1 to 5% of the float because they were running 100x leverage. Can't easily do that anymore, right? That's why the volatility this cycle, although it feels painful, everybody's pessimistic, it's actually muted versus previous cycles because the amount of the float gets worth more. There's more people holding. There's more under lock and key. And so that'll keep happening at the same time that every country is forced to print money. The only countries that can't print money are based on dollars. So, and so that's not going to stop. And so, back to your original question about Europe, what's the exit strategy? Where's the release hatch, right? For middle-aged money. It's not looking good. And I think that look, I don't want this to happen. I'm super bullish on the future, by the way. I'm not a pessimist. I am a believer in exponential tech. I think it's going to be a glorious future. I just don't know if it's going to be a dollar-based future or a fiat-based future. I hope not. But it is what it is at this point. So I am a huge believer that the future is going to be a marvel. And I'm so excited to be part of it. But we have a monetary problem in the West that we created, and the problem isn't going to just solve itself, be some miracle.
Right. And I feel like, what we're hearing more and more about is this national debt crisis, especially with the bond market. We're going to start, paying interest rates on all of this debt. And it feels like with the midterms heating up in the US, this is just becoming just an absolute focus for both sides of the political aisle. On the right, they're claiming the left, is paying too much via entitlements, and on the right, that we're paying too much to the military. Both sides are paying too much. Both sides are contributing to the national debt. It's becoming the forefront of the narrative. And it seems like now Bitcoin, and then obviously inflation and all of this, money printing translates into higher prices, and that is ultimately what reaches the public. Bitcoin feels like it's positioned against that. You also, with data centers, have a little bit of an anti-AI narrative. Bitcoin, as we mentioned earlier, is sort of pivoted against that as well. It feels like it's Bitcoin versus AI, not necessarily crypto versus AI. And so in a lot of ways, Bitcoin feels like it has decoupled and is starting to become inversely maybe decorrelated, but inversely correlated from the traditional equities markets that are primarily fueled by AI these days. That's one part, right? The altcoin complex feels like, with all of the attention on revenue, feels like very correlated to the equities market. And so I'm just curious if you're seeing this similarly. It feels as if altcoins are increasingly correlated to the equities markets, but Bitcoin has sort of gone off on its own and decoupled in a lot of ways. Do you agree with this? And how should we react to this in a forward-looking sense?
Yeah, a lot there. So let me see if I can kind of simplify for myself. So I think that right now, as I said, Bitcoin isn't a viable replacement for gold yet. It's too new, but it's getting there rapidly. I think in less than 10 years, Bitcoin becomes a viable replacement for gold. And that's a miracle, because we're talking about 25 years, soup to nuts, all in, Bitcoin can replace gold for society. And it's proven that it can do it. That's incredible. Okay, so I think that does happen. Now, right now, the price of Bitcoin tracks global liquidity. Okay.
Yeah.
And so does NASDAQ. Okay. But the difference is that NASDAQ tends to track M2, US M2 closer. And my impression is Bitcoin tends to track global liquidity closer. And China has not been helping with their, the real estate crisis they had and other things. The global liquidity has been flat while US is printing money because of what's been happening in China. It's my impression. I'm not a macroeconomist, but I know enough to know that the global situation is even worse than any U.S. situation right now. And of course, U.S. rates rising means that the U.S. is going to keep printing. And I think global equivalent of M2 has turned and it's increasing, and I think that's coming back, and stocks as well. The volatility day to day, again, that's a narrative driven thing about, AI and DRAM and, metrology, whatever equipment they're selling to do this stuff. But again, it's a generational shift, and I see that all going up and to the right, magnified by money printing. So meaning the exponential tech is like a levered bet on, the money printing. Just like Bitcoin acts like a levered bet on the money printing. And so, like I said, that's the escape hatch. And if I heard another macro guy that I'm friends with, he said if you're treading water at 7.5% right now, and from a lifestyle savings, and if you have no leverage and you're earning 7.5%, that's crazy, right? Yeah. But it's true, and that's the situation we've created for ourselves now.
Yeah. It is a fascinating development out there, and it doesn't seem like it's slowing down. And so you've decided, to allocate time and resources to Abra and build this out so that more people can get involved here. I have here that Abra is looking at a $750 million SPAC deal to list on the NASDAQ. And I take it maybe the Clarity Act is sort of wrapped up in this, but I'd love just a little bit of an update on how Abra's doing, what you're seeing, Sure. What does the customer segment look like, and how you're approaching this potential listing on the NASDAQ.
Sure. So we did announce a business combination agreement back in I think it was the late spring with New Providence, and that's in motion. And so a bit of a quietish period there. More documentation to be filed soon, and all kinds of disclosures and whatnot, and do hope to get it done very soon. And everybody, lawyers and accountants and everybody are working feverishly to make sure we get this listing done as soon as possible, and that's what we're working towards, and we are committed to that. On the business side, we're really pushing the envelope with a lot of new stuff right now. We've launched a new basically yield-bearing stablecoin. It's a synthetic dollar on Solana, USDAF. So the platform's called Abrafy. And USDAF basically is allowing you to basically convert Tether or Circle into USDAF and earn, I think we're paying, it's like 8 to 10% on any given day. It's been higher. And then there's rewards tokens. So right now, I think the juiced yield is something like 25% that people can earn, which is remarkable. So I keep a lot of my dollars in there. And then we're doing similar things with Bitcoin yield and then incremental yield on top of staking for Solana and Ethereum. And our goal is to basically and then we also have a very large lending business against Bitcoin. So, high net worth clients, institutions that want to borrow against Bitcoin can access DeFi networks through Abra as an RIA without having to know the complexity of DeFi. So we handle all of that through our technology. They're borrowing against DeFi, but without having to know all the ones and zeros of how it works and dealing with private keys and all that stuff. So that's really cool, and that's been a big win for us. But what this is doing is it's setting the stage for what's next, which is tokenized everything. So as an RIA, we are a fiduciary, we are an investment advisor, even though right now it's basically crypto. The next generation, it's going to be tokenized everything. So all the yield that we're able to generate on Bitcoin, on dollars, our goal is to be able to do that with anything, right? Even if you're also earning dividends. So, and then enable loans on any tokenized asset, right? Especially, liquid assets especially. So that's where this is going. And portfolio construction in the wealth management space is about to be upended because of the combination of tokenization and AI, right? You can build real-time, automatically rebalancing portfolios, fungible tokens. You can move your Apple into Bitcoin, your Bitcoin into private companies, or whatever, right? Any combination of them, and borrow against the value of the portfolio, which I think for a lot of people is the future of banking. Meaning, I think wealth management and banking are going to kind of merge in this new world order of always on markets. And you'll see wealth managers offering perpetual futures, right? Because they have no choice. Otherwise, the inheritance is all going to go to Robinhood. And so, this is, I think, good news for Abra, because we're laying the rails for all of these services in the wealth management space.
And so do you think that we're at this point where with inflation, with the high bond yields, we're at a point now where it's going to be like, even if this isn't actually the case, the perception is that I have to use leverage. Like it's like I have 5 years to make it financially, or else, I'm going to be in the permanent underclass. Like this is going to fuel another era of just an increasing amount of leverage in the system.
So there is this growing perception for the 35 and under crowd that that's their only hope. And that is just not true. Okay. Yeah. There's a lot of things you can do from a cash flow perspective. And, I de-dollarized my life. My personal beta is Bitcoin, right? I think about what can I do to ultimately have more Bitcoin? Or if I'm making an investment, right, is this investment going to return more than Bitcoin over 5 years? That includes time to liquidity, right? Because I may make an investment in a startup that could go 100x, but if it's not liquid, then it doesn't matter that it went up 100x, right? Yeah. So all of that factors into how I think about, my own wealth, but I'm not normal in that regard. And so I have to basically recalibrate when I'm talking to my clients, because most of them think in dollars, which makes sense, right? I mean, we've been educated and brainwashed to think in dollars, right? Because we need that to perpetuate the scheme. So anyway, I think that's going to change. And I think, back to your question, there is this perception that you need excessive leverage, which I'm convinced you don't, but you need to be smart, and the kind of diverse portfolio, if you're 25, may not work. You may need more concentrated bets, and that's okay, because if I would tell people, all right, I'm not giving investment advice here because each person is different, but in very general terms, if you understand exponential technology and you could ride that 10-year wave, you're going to make money. I don't see a scenario where you don't. Okay. And so, but the time preference, the time horizon is the key.
Yeah. You're absolutely right, and it reminds me of a chart that I saw. It was the equities market, and this was before the most recent correction in the equities market. I saw this sometime last week, but it was the equities market, I think probably S&P or maybe NASDAQ, priced in gold. And this thing is just, it's not down only, but it's just been ranging since like the 80s or 90s.
Yeah.
And this perception is that this market is just totally gone, berserk, and it's overpriced and it's expensive, and I don't want to buy an expensive stock market.
Yeah.
What's that?
It's being measured incorrectly. That's it. Yeah.
Exactly.
I think it was Michael Saylor a couple of years ago. I heard him, and I wasn't sure if he was right, and I went and checked. He basically made the point that if you track the S&P from the 50s to today, it basically was, more or less flat post World War II, right? Because the money supply was not increasing. But it has basically tracked the rate of increase of the money supply for 75 years. What does that tell you, right? And that's with the massive productivity gains of information technology and now, internet and AI, robotics coming, right? So that tells us that is also offsetting a bunch of stuff which is rapidly in decline, right? So it makes it confusing for people who think they should just have a diversified portfolio. That made sense when the empire was still at its peak in the 80s and the 90s, when you may have been on the other edge of the peak, but you didn't know it, right? Because everybody was still riding high and the .com was working. Now I think you need concentrated bets. It doesn't mean leverage, look, if you take 5% leverage in your portfolio and go, put money into, startups or whatever, that's fine. But it's not for the average person, because the average person will lose those bets on startups because you have to make such a wide variety of bets to get a home run in a startup. But the point is, I do think exponential tech is people's best chance, and that includes crypto. The L1s I think are going to be huge winners. It's my belief, right? I think there's going to be like 5 L1s that are just going to ride the next wave of money in, along with some of the dApps that are getting big revenue, and that's part of the exponential tech thesis for me.
Yeah. We're kind of short on time, but we just got a couple minutes left here, and we talked earlier about how there's like all this demand on the sidelines, and we sort of figured out geographically where this next unit, the next new buyer comes from. We talked about Europe and Asia, but where are they currently positioned? Like, who do you think are, obviously we're bullish on Bitcoin here. We're bullish on some of the L1s. We're bullish on, exponential technology, as you put it. And who are the biggest losers? Like, where do you think all the liquidity that is currently on the sidelines, but it's ultimately going to flow into those categories, where do you think it comes from? Where is it currently positioned?
When you say, do you mean the money or the demand?
Maybe you could. What's the difference?
Well, okay, so I think that we are on the cusp, like I said earlier, of global money printing, right? And right now it's very U.S. concentrated, and I think a lot of the U.S. money was diverted to AI, right? Right. And I think that rotation is going to come back to crypto this year. And I think, but it's going to be more broad-based globally because global money supply is increasing. And look, that's happened. This would be the 4th time basically that's happened. And it would be the first time it doesn't happen. Right. So that's a good bet. Right. Yep. And so at the same time, the narrative around the use cases is crystallizing. Right. Obviously, last year it was about stablecoins. This year, the narrative has been, kind of appended with tokenization as the next evolution of more broad-based stablecoin usage, or more broad-based tokenization usage beyond just stablecoins. And then I think you're going to basically get into real bank replacements around lending, and DeFi Part 3 is going to have its day when it's going to be not even just the neobanks, but the banks themselves are going to become DeFi-based, DeFi-enabled, et cetera, et cetera. And so all of this is going to create more and more narratives for these, layer one blockchains, and it's going to become hard. I think it's going to become harder and harder for companies to just keep releasing new blockchains. I think, it'll continue to happen, but I don't think it's going to I don't think it's going to matter as much as it probably did, a couple of years ago. Application specific blockchains, just, I don't know. It's too hard at scale.
Yeah. And so do you think, we I think agree that the AI build out is continuing to happen. This is just still very early in this generational run. But do you think, this is going to come from, is it going to come from the bond market? We're going to see a bond sell off. Yields are going to go through the roof, 7% on the 15-year, 30-year. Do you think it's going to come from the non-AI equities like SaaS? We're going to see this migration, capital rotation into Bitcoin. What like those structural categories? Where do you think we're going to start to suck the liquidity out of?
I think I do think bond markets have a major problem, right? I mean, look, they're my friends, but many RIAs are lazy, right? So meaning the 60-40 allocation should have been labeled as dead 5 years ago, and which it was. It should have been. It wasn't. I've been saying it for 5 years, and yeah, it's if that rotation starts en masse and wealth advisors start saying you need to be 80% equity, maybe 20% other fixed income instruments besides treasuries, interest rates are going to go through the roof. And I don't know what the government's going to do to respond to that other than just keep printing yield curve control, whatever they're going to call it, which is going to lead to massive price inflation. And so anyway, that would give us a double whammy, because you would have the money coming out of and via that rotation, plus the excessive money printing that it's going to take to buy those bonds in the first place. And that's going to flood the banks with more cash. And so I can paint a couple of scenarios here that really get us to $1 million Bitcoin in the next 5 to 7 years. And it's not a stretch. Yeah.
I was just thinking the same thing in my head. $1 million Bitcoin sounds like a stretch until eggs cost $20 a dozen.
Yeah.
You
double, you're there. And the money printing is going to have to be even bigger than it was during COVID at some point, because the servicing of the debt, unless we default, a restructure, which is what late stage empires do sometimes, according to Dalio, if you read his book, which I think he got it right. But if save restructuring, we're going to have to print even more just to pay the interest on the debt, not to mention the fact that at some point, we're going to have to deal with Taiwan and all of that, which is going to mean more military spend. And so it all basically points to, like I said, that rotation plus the money equals, risk on assets, and Bitcoin in that regard, because it's not gold yet, is still a levered bet on risk on assets.
Yeah. Bill, thank you so much for joining me. This was, I really liked this conversation. I feel like it got us a little bit zoomed out of our typical tunnel. And I hope the Empire, I like it here. I hope it continues to work out. But if it doesn't work out, where are you moving to?
I'm not going anywhere. I'm going down with the ship. No,
Okay.
I want to fix the ship, and I think as we restructure, I think this is the last kind of empire cycle that the human race will live through this way, because I think we're less than 50 years from merging with the machines, at which point the cycles don't make sense anymore. Traditional monetary theory doesn't make, Keynesian economics certainly goes away, right? And maybe something like Austrian takes over via Bitcoin and other technologies. I don't know. So we'll all be fine. It just won't be fine as defined by a traditional empire anymore. And our great grandkids will be going, y'all did what? And how, you really? Were you stupid? And so I'm looking forward to that day.
Yeah, exciting times. Bill, thanks so much for joining me. I would love to have you on again soon, and best of luck with this NASDAQ potential SPAC.
Thank you very much. I appreciate that. Look forward to seeing you soon.
Absolutely. We'll see you again soon. All right. We are going to get our next guest up on the show. We are cooking, guys. We are absolutely cooking today. One Arm Bandit in the chat, Edward in the chat, Yeah, Freedom guy in the chat. Guys, we'll address the fake Satoshi guy that came on the show. Don't buy anything that guy is selling. I was cooked after 7 hours of a live stream, and my producers said that I had to get this guy on the show. So we are not going to platform any fake Satoshis for quite a while. We're going to get our next guest up very, very soon. We've got beef.hl, the Hyperliquid man himself. You guys heard him last week. And we're going to get him up again. He's got a update for us from the Hyperliquid ecosystem. And I'm excited. We're going to go about 10-15 minutes with Beef. And then we're gonna keep it rolling. He's got a presentation for us. I hope you guys liked Bill. Bill was a very, very big thinker, fun guy. Obviously been around the block a little while. According to my notes, he is a serial entrepreneur. And he did a 2011 TED Talk on Bitcoin when it was at $3. So this guy's been around for a long, long time. I tend to trust the guys that survive from cycle to cycle. And Bill has certainly done exactly that. So very, very cool to have Bill on. And I think he's going to continue to do well. I think he's right about a lot of things, including everything he's saying about the bond market. He also talked about where the next new buyer of liquidity comes from, Europe, the Asian markets, as well as the categorical, shifts that we're seeing in the equities market and in the bond market. I mean, it's just pretty insane. What we're seeing out there, late stage empire type stuff. I think we've got Beef in the back. We're going to bring him up, and he's got his grill report. So we're going to get an update on the Hyperliquid ecosystem. There he is. Beef, you're on the show. Welcome back.
What's up? Man, you're having me on right after you say this is like Doomer type stuff, huh?
Well, that's the thing, man. I think it might be Doomer type stuff for certain parts of the market. Obviously, I'm sure you saw what Leopold, Assenberger did, and his situational awareness, $45 billion fund, blew up this week. Got bought by Ken Griffin. So there are, certainly it's volatile times. But part of the thesis is that, if you get the bond market blowing up and you get cracks in the equities, there is a rotation here that ends up in digital assets. And so it's sort of Doomer times, depending on where you are and what you're allocated in. And I think, we've kind of already seen in my opinion, we've already seen a lot of the pain in the digital assets market. And so I think we're kind of in apathy, maybe it's low volatility, low volume for a little while, but we're gonna make it through, Beef. We're gonna be just fine.
Amen to that, man. I couldn't agree more. Especially if you've been in the Hyperliquid ecosystem, you probably haven't felt that same level of pain. It's only been recent that we've felt it a little bit, but a lot of the metrics are at all-time highs, so the vibe is completely different if you're in HL.
Yeah, absolutely. So let's get into it. We've got your grill report. Let's go ahead, get it up on the screen here. The audience can see it now. And I'm excited because we did this again. We did this last week. We're going to do it again today. Give us the grill.
Yeah. Hot and fresh off the grill. All right. So obviously, all my chart enjoyers are aware of where hype is. We're kind of in this chop city zone. Looks like a big recent liquidation cluster dropped a little bit, maybe around 48-ish. Used to be 52. So who knows? Does that mean we go a little bit lower before we go back up? I think they'll just adjust it again, drop it further. So eventually the pain will end. But this is what was really big. So we talked about it last week. HIP-3 is really firing on all cylinders. And we're talking here, we've now had new all-time highs for volume, and just the whole week has been killing it for RWAs. I think it's 67% today of the volume has been HIP-3 markets. So primarily that's Trade XYZ, as we all know, with some other smaller ones, markets, Paragon. Super cool to see this. But again, it's flipped crypto, which is pretty awesome to see. Wow. It's almost double. Yeah. It's more than double the total volume trading there. So people, those crypto natives are being taken by surprise here. But I mean, if you see the total TradFi volume that usually trades and you think, okay, this will eventually make its way on chain, we are seeing that. And Hyperliquid is is definitely putting up some big numbers on the scoreboard. So this is very exciting to see. So over the past 7 days, we've burned 145,000 hype, or 7.91 million. We've got the Coinbase native yield also going to be kicking in soon too, and further firing up these buyback mechanisms. That's really going to get stuff flowing even more. And I think that starts, is it next month, I think?
I believe so. I think so, very soon. And that is when interest is going to get kicked in, right? And then you're saying that the anticipation is most, if not all, of the interest that's generated on deposits in Hyperliquid is going to be used to buy the token, because it's counted as revenue, right?
Correct. Yeah, I think it's 90% of that yield is going to go back to buying the token. And if I'm not mistaken, I think it equates to over 100,
like $400 million a year.
Yes.
Which is,
there we go. Yeah. There we go. That's a big one. Yeah, this is a good one. So open interest, Hyperliquid's flipped to Bybit. So we are climbing. This is, in my opinion, the true battle for Hyperliquid. It's cool when we're battling the dexes, the perp dexes, but this is the real battle, right? The sexes. If we can keep climbing these ranks and make our way to Binance and keep chipping away at it, that's going to be so impressive to me. So I'm very proud of where we've come as the community. This is great to see. This is great signs. Again, we're climbing the ranks. So Hyperliquid's definitely taken over.
Yeah. OKX seems like it's just right around the corner there.
Yeah, it's neck and neck, but I mean, hey, we're doing it, man.
And OKX is the Korean exchange, right? So, I mean, they're having some rough times over there in Korea in the equities markets.
Oh, for sure. And that's definitely contributed to why HIP3 has been doing so well. You're getting some extreme volatility, and if you're able and you got the skills to catch some of these wicks, you are making it rain. Unfortunately, that's not me. But other people, yeah, for sure. I'm sure they are. This is pretty cool. So Hypercore TVL is now near the all-time high. So we're like about 2% away. This is a good sign. So even though the price is down, activity, deposits, people using portfolio margin, staking is getting up there. So in my opinion, this is just further positioning. I think we're going down the right road here.
Beautiful. Very cool. And yeah, let's keep going. Don't let me slow you down.
Yeah, I had a couple other like key news points. I'm sure you guys covered them to certain degrees here, but this was pretty cool. There's tons of theories about testnet. There's whitelist addresses that are like being tested right now. People are speculating this might be the route that, like, say a Coinbase goes. That's pretty strong speculation, but like an entity where people have to be KYC'd, this would be a great route for them to do. So interesting theories.
General compliance with U.S. regulation could be achieved if we were to see some sort of rulemaking, perps rulemaking by the CFTC in the U.S. In which each user would have to be KYC'd. They could KYC and do a whitelist or an allow list of the markets that they're able to trade and the accounts that are able to trade them.
Exactly. So there's tons of potential there. That's exciting to see, but who knows for sure what it's for, but we'll see. It's nice to see that I think the SEC said even if clarity fails, they're still going to implement some new rules. I think,
right.
Yeah, so that's exciting too.
Very cool. Very, very cool.
This just got live today. Testnet HIP4. They talked about it. Now Jeff announced today that it's actually active now. People are already trying to set up their markets and test things on testnet to get it super ready whenever it's fully live. So that's exciting to see. And then I'm sure you guys covered this, but this was good to see. Trade XYZ again showing how classy they are. When they had that one share that messed up the Oracle, they learned from it, and they're going to make sure to take care of people who had losses after that price anomaly.
Yeah. Do we know how much Trade XYZ is going to cover here? How much liquidation losses were we looking at?
No, that would have been a great metric to have, but no, I'm not gonna lie to you. I'm not sure. I don't think it was that much. I think it was only a couple $100,000 on that much. For me, that's a lot, but no, not that much.
Understood.
Relative.
The Korean markets have had so much volatility. It's been insane to see. It seems like 4 or 5 days in a row they've limit down in their markets, and so that contributed to the Oracle feed as well. But yeah, it's very cool to see that Trade XYZ is covering this. And here I see you've got some news in Japan, which is also doing some pretty wild things on the macro front and intervening in the Japanese yen to US dollar currency market. But here you've got a company that is adding hype to their corporate treasury.
So this is exciting, just getting that worldwide buy-in in the traditional markets. I don't know how you say it for sure. I think it's EOL, but I'm hoping that I'll be able to speak with the CEO soon for an interview and kind of get where they're coming from. But this is exciting to see, another good sign that, people are recognizing the value that Hyperliquid's providing. This is pretty cool. Don't know if you caught this, but there is a new page on hl.eco with HRC. Awesome research coming out there. And they have this fantastic financial breakdown where, it's much more familiar to like the TradFi type user who might be investigating Hyperliquid, or if you just want to sound smart and share some numbers, definitely check this out. Really cool stuff. And this is great for our ecosystem when people make stuff like this.
Absolutely. I mean, we love all the dashboards, and we appreciate all the work that you've done here as well, keeping us up to speed on the research front.
Hell yeah, man. I appreciate you guys having me on and helping, spread the word of Hyperliquid, because people are curious. They just don't know where to get the information. And that's where we come in, right? But yeah, we've got a new episode, HYPERMEAT episode, coming out Monday or Tuesday this upcoming week with the Hype Economist. Be on the lookout for that. And then this Saturday, tomorrow, we're going to be having a Hyperliquid social community spaces. So if you are curious about Hyperliquid, come vibe. I'm going to have some bourbon, and it's going to be a good time.
All right. Beef is drinking bourbon with his steak this weekend. Very cool. Thanks again for joining us, Beef. It's pretty incredible times out there. Market is Chop City, but I do believe we're going to get a reaction in the markets pretty soon. Tons of volatility in the equities markets, apathy in the crypto markets, and I believe there's going to be a rotation at play here. We're going to see some more volatility, more volume, more open interest, more revenue, and we're ultimately going to see these things do quite well very, very soon. Appreciate you putting this together for us and joining the show as always. And what do you say, Beef? Same time next week?
Hell yeah, man. Sounds great. Thanks for having me on.
Let's do it. We'll see you again soon. Thanks, Beef. Have a good weekend. All right, guys. You guys heard it. That's the update on the Hyperliquid ecosystem. Very, very good stuff happening. Obviously, it's a low volatility environment right now. It feels like it's Chop City all over the place. It's apathy in the digital asset markets. We're going to keep bringing you guys everything you need to know on a daily basis, but it is important to recognize that, exchanges build their businesses on volume. Volatility means volume. When volatility is low, it means volume is low. That is directly affecting the bottom line for exchanges. So we saw BitMEX wind down. I believe we saw BitMart wind down. I think I got that right. It's directly a result of what is happening in the markets. It's a low volatility market. It means low volume. It means low revenue, right? Because less people are trading because there's not as much volatility in those markets. And so we're seeing that happen despite, what's really exciting though, is the indication that the market is rebuilding itself. And I think, look, 10/10, October, wasn't even that long ago in the grand scheme of things, less than a year. Significant liquidity crisis, crunch, whatever you want to call it, happened. And now, we're almost at, if not slightly above, the levels of open interest on these perps exchanges that we were around 10/10. And I think, despite the low volume market conditions and the low volatility market conditions contributing to the low volume, it is very, very encouraging that we're seeing open interest at the levels that we were at when prices were much higher. I think this is a very strong indication of the fundamentals are very strong underneath the surface. And I think this sets the tone for when volatility does return to these markets, that ultimately volume will increase and therefore revenue will increase as well in these exchanges. So that's a little bit on the hyperliquid ecosystem, but also, this is happening all across the board. This is a general indication of just the way that exchanges are reacting and the way that they tend to react to the lack of volatility as we enter some of these apathetic market conditions. So guys, we're gonna get our next guest, Steve Chung. He is CEO of The Block. And we're going to get his view on the market. Steve Chung took over as CEO of The Block in April of this year. He is now focusing on scaling the institutional research and data using AI and bridging crypto with TradFi. I mean, that is the direction, that is the trajectory for our industry as we converge with traditional finance, and it all just becomes finance. Let's go ahead and bring up Steve on the show. And Steve, welcome. It's a pleasure to have you.
Hey, Robbie. Nice to meet you, man.
Absolutely. It's good to meet you too, man. Thanks for joining. And I think it's your first time. So I'd love to just, hear a little bit more about you and yourself, and we'll get into what you're seeing at The Block.
Yeah, thank you. Thanks for the invitation. And not only is it the first time on your show, it's actually almost like a 3-month to the exact day anniversary for my joining The Block. So it's a pleasure to be here.
Congratulations.
Thank you.
Yeah, it's good timing. So tell us a little bit more about, how you ultimately landed here at The Block. What were you doing beforehand, and a bit about your journey to where you are today?
Yeah. Look, I actually got my career started in TradFi. So worked at Goldman Sachs in New York as my first job out of college. And through my windy path, I was the chief digital officer at Fox, where I was managing the digital business for the local owned and operated station group. So that was my exposure to the news part of the business. And then, more recently, I was the COO of Zaki, which is the famed NFT project. I was brought in with the founders to really sort of grow the post-NFT part of the business. And so that was my intro to crypto. And here I am as the C of The Block. And for me, The Block had this rare thing that is really hard to actually build, which is a great brand integrity, and be trusted by the institutional, decision makers, but still be able to be crypto native. So it was a really unique and exciting opportunity to take the helm of a brand that is 8 years into the making. And so it's a pleasure to join you as part of the crypto media ecosystem here.
Absolutely. We love you guys. We love The Block. Been looking at everything that comes out for a long time. And, our industry has gone through so many twists and turns, ups and downs. I mean, it feels like there's never a dull day. So it makes for a really, really fun position to be in. And I mean, despite the market conditions that we're seeing here now, still never a dull day. Obviously, given that the crypto industry sits at this very unique convergence point between AI, between traditional finance and tokenization, all of these things happening at the same time, I'm sure the first thing I want to ask you about actually is this situational awareness guy. I mean, what an absolute levered up just character that guy is. He took, I think it was 25 million to 250 million to 45 billion. Yeah. Had it 4x levered up to 120 billion. And then obviously a 25% decline levered up 4x is 100% decline. Just got bought out by Ken Griffin. Yeah. What do you make of this situation generally? And then do you think there will be any spillover effects into the crypto industry?
Yeah, I mean, it is phenomenal. I mean, the numbers, I'm a little older than my crypto colleagues, mostly in the industry. And so I've seen some cycles. My first job at Goldman was in 2001. And the first shock to the system there was 9/11. For many of you who have read about it or have been through that, that was quite the shock. But fast forward to 2026, I think the situational awareness situation, so to speak, I think is a little bit emblematic of kind of the times we are in today when, you know, market caps reach $1 trillion in the equity capital markets for, you know, some of the biggest market caps, which, you know, I never imagined companies would have a T on the back of the market cap. And here we are. And some of the biggest companies have swings of 10, 15%. So in that sort of like volatility at that scale, a blow up like this to me is, you know, honestly not surprising. You know, $1 trillion market cap companies aren't supposed to move that much. But when you have this kind of capital investment, and especially the AI trade, you know, swinging the markets up and down, you know, like names like SK Hynix, that obviously went public through the ADR process. I think a lot of that like unwind and the connectivity between, you know, capital, especially levered by the AI thesis. I don't think this is like the last one we'll see, you know. I've seen, you know, some of these things happen. Whether or not this will be, yeah, I don't think the good news is that this is like a systemic risk to the market. But, you know, the fact that the crypto markets, which have, you know, I think one of the most sophisticated markets in terms of you know, using leverage, as tokenized stocks and crypto kind of fuse, I think that there will be, unfortunately, more situations like this, where you're blending kind of this 24/7 always on availability with the power of tokenization and crypto, with the leverage of DeFi. I think some of these outcomes are gonna happen, both on the massive wins and the massive liquidations like what we saw today.
Yeah, absolutely. It feels like we're entering an era of just increasingly levered up people and companies, hedge funds included. And this is the paradigm that we live in. I mean, Apple is down like 7 or 8, maybe 10% today. Amazon is up like 15%. Microsoft went on a double-digit rip earlier in the week. This feels, I mean, it feels like this is going to become, it's more likely this becomes a new normal than this is just a thing that passes and we move on. So
and it's a little very scary. And I think, you know, people like you and us at the block, I think we're going to play a more important role than ever to just bring some insight and perspective to this sort of, you know, highly volatile market. And so, you know, from a media company perspective, you know, there's a lot for us to dig into, you know, and I think growingly, as you sort of put in your intro, the fact that the block has a great fundamental sort of institutional client base, both on readers, but our Block Pro side, which is sort of our data dashboard research part. There's a lot of interest on that side of the business, and it's an area that we really would love to grow and double down on.
Given that there's sort of this like feeling of like, you know, on the retail side, it's probably best characterized as, you know, I've got 5 years to make as much money as possible. And then and if I do, then I'm part of the Citadel. If not, I'm part of the permanent underclass. Right. And it calls for like this just extremely levered up, you know, philosophy as they enter the markets, and institutions are kind of following suit in a lot of ways. And, you know, we saw that with Leopold's hedge fund, and we're seeing that play out in the bond market. Do you take a different tone? Is there one that like, is it just faster paced all the time? Is it just continuously trying to like dig deeper scoops from like a journalistic media perspective? How do you react to these kinds of animal spirits in the market?
Yeah, you know, I think us being in media, and it's really fun actually, you know, as a, you know, operator in media to be on another media platform because we can sort of talk shop about that. But I do think that general news especially is transforming, you know, and I think, you know, and previously I was also at a company called CJ Entertainment, which is the largest media and entertainment company in South Korea. K-pop, K-drama, K-film, produced Parasite, and also owns a studio that does Severance. But
great
there,
movie. Also love Severance.
And you should check out some K-dramas too, man. Those are pretty addicting as well.
Parasite was great. One of my favorite movies I've watched this year.
Yeah, no, it is phenomenal, and phenomenal company. But anyway, the Bob Iger, the former CEO of Disney, had a great quote when he described sort of entertainment, and that industry is obviously going through transformation similarly, is that, basically general entertainment is dead. And the only entertainment that's going to survive are very specific targeted, audience. You really know what the audience wants and you deliver that. And it's not commoditized or general or bland. And I think in this day of, AI, that's even more accentuated, right? AI could pretty much give you the same commoditized news and information at the tip of your fingertips. So as media folks, as folks in media, in news especially, I think the market is segmenting to a few different categories. On the one hand, you have kind of breaking news, and audiences there don't really value like your insight or curation. They do, but the most important part of that is speed and just raw data.
Right.
And it's like, let me do my own analysis. Just give me the facts as soon as you can, and either plug it in the back end or give me a push notification, or just get me that information a second, 5 seconds, 10 seconds, faster than somebody else. So that's one bucket. Then the second bucket are, on the other side of that spectrum, insightful, analytical, counterintuitive or counter thesis articles or insights and news or research that change the way I think about something or shine a light on something that, wasn't, kind of up to the front. So you have kind of this barbell, whereas a lot of the news in the previous years were more generalized, more toward sort of everybody. But now you're sort of seeing the split of that barbell. And then the rise of the more personality-driven, narrative, video, long form in many cases, similar to what you guys are doing as well. You guys have done an amazing job, building your brand and your audiences. So that's another category that's, I think, emerging. So long story short, I think when we can call news or information, that is transforming. And in that age, again, with AI being so disruptive to that mix, it's what you asked about, sort of me joining the block. I think it's going to be very difficult for a newcomer to have a brand like the block, where for 8 years you've built up your audience and the trust and the integrity, and you're able to have that great brand, but also have that crypto native credibility, but also an institutional readership. So I think there's going to be the middle masses of generalized, non-differentiated, commoditized news are going to all go away. And the folks who are remaining are going to kind of be in one of those three buckets. And, somebody like the block, I'm really excited by kind of what this means for us, because I think we're going to get stronger in this sort of new ecosystem.
I think that's absolutely right. It's intelligence. That's at the heart of all of these conversations these days. And there's so many different ways to slice it and dice it and portray it and format it. And so ultimately, we see how intelligence is becoming commoditized, but it means that we're always constantly demanding more of it because we know that it can now work for us because it is so much more powerful. It can shift and shape into whatever we need it to be at any given moment on demand. So there's a lot that we're pulling out of these intelligence mechanisms, and it's being served to us in so many different shapes and sizes. There's human intelligence, there's AI generated intelligence, and it really feels like now there's a market that can just pick and choose exactly what form they want to consume this media, news, intelligence in, and they can all complement one another. So it's been very, very cool to see.
Yeah.
But I think you're absolutely right about trust. Trust is something that is not given, it's earned, and it does require some consistency and durability in the market in order to maintain and bolster that trust, which I think is something the block and I think the Rollup has done a great job at. And I want to actually read something here from another company in the crypto media space. Cami Russo, who's from The Defiant, you're probably familiar with her and The Defiant as well. She wrote this article, maybe you read it, breaking a crypto media crisis is upon us. VC money is flowing to AI, trust in media is at record lows, and crypto is growing up. And she goes on to say that there's just been so much kind of I guess, destruction, for lack of a better word, in the crypto media space. Blockworks newsroom gone, Bankless layoffs, Unchained layoffs, Decrypt layoffs, Cointelegraph, Google debacle. 2 companies not mentioned in here, the Block and the Rollup. So shout out.
Yeah.
And she says, starting in the second half of last year, at least for the Defiant, things got hard. They got hard only on the sales front, though, which was frustrating because our traffic and subscribers were and are near all-time highs. And so I'm just curious if, you had a chance to read this article, what do you think, just general reactions? And I'm curious, are you seeing similar things at the Block where, sales and market conditions are correlated, things got hard, but traffic and subscribers are near all-time highs?
Yeah, no, I think a lot of great points in that write-up. I think the fact is that the news and information category at large is under attack and in transformation, and so there's no denying that. And then you couple that with the tale of two cities of crypto, where the token prices and the protocols and the L1s and the L2s, they're really suffering. At the same time, you've got this amazing institutional wave coming on, which is what crypto always wanted and is sort of all finally here. But somehow the economic realities of that end state don't seem to sync with our expectations of the previous year. So I think that's where the kind of the cognitive dissonance is. Like, how can we be at a place where you have somewhat regulatory clarity and more's coming, hopefully, and you have all these institutions and trillions of dollars of assets coming on chain, but how could we be suffering so hard? I think that is the interesting and sad reality of today. For many folks, that's an opportunity. For many folks, that's the death knell. And so I think that the points you raised there, very, very important. But I think the age of media companies monetizing solely from advertising and sponsorships, while that will still continue to be important, if that is the only reliance on sustainability, I think the future is not very bright for that sort of a media organization. And in part of the Block's sort of differentiation, we've got really 2 sides of the business. We have our news desk, which continues to put out trustworthy, integrity news that are insightful and breaking. The other side of our business is actually a B2B business. That's the Block Pro. There you have data and research. There we have a new product called Campus, which is a new ed platform to help the market understand the basics of crypto. Recently we did a Campus course on prediction markets sponsored by Polymarket. So we're really, figuring out other ways to serve that institutional wave of interest in crypto. But that business is based on recurring revenue, it's platform fees, it's long-term relationships that help shield from the volatility of the market cycles, which is very sensitive when it comes to just advertising and sponsorships. So you use the word intelligence. I think that's where the future is. And just the monetization on traffic, especially in a changing world of AI and SEO and GEO, you got to be positioned as a media company to where the audience is finding that value. And I think it's not going to be just commoditized, volume-based, traffic-based type of business model. It has to be where's the value and people paying for that value through that intelligence layer. And so for us, I think the ultimate goal is in our vision, like if you're in a crypto or crypto adjacent business, that you can't do your business and you can't get through the day without touching some part of the Block's product. And that's the big goal for us. That's where we want to be.
Yeah, very cool. You mentioned GEO, which is another facet of the business that has just appeared in the last few months, and is now a big portion of where we spend our time and what we have to focus on in order to continue to serve customers and audience. So I think that's just another new fun thing that we've been participating in.
And Robbie, I'm curious. You guys have been at this for a while too. I mean, how do you think about AI disrupting our business model? What are your thoughts there?
Yeah. Well, I It's a great question, because this is something that I think, not only media is faced with, but I think it's every industry. Every industry is becoming an AI company. Every company needs an AI strategy. So I think there's just an increasing focus on what to do about it. How will it affect us, and how can we react most effectively? I think like we're seeing the intelligence itself, the frontier model companies with the open source models out of China and the frontier models here in the US are bringing prices down. And so intelligence is becoming extremely, extremely affordable and extremely good and quality. And so at what point it becomes commoditized, I don't really know, but it does feel like it's, similar to block space in that sense, where it does feel like it's becoming a more abundant and affordable. And so I think it's important to remain creative in how we're reacting to the commoditization of intelligence. And so I'd imagine that what happens is very similarly, we end up kind of thinning out the middle again, and the barbell continues to proliferate. So, what is above the stack in terms of the intelligence itself? What are the different formats? What are the apps that leverage the intelligence? How do we, continue to generate, good products, good applications that are leveraging this intelligence? And then similarly, actually providing the intelligence. And I think from a media perspective, that looks like GEO on the infrastructure side, because we're providing the intelligence itself that the frontier model companies are then, proliferating to everyone else in the industry. And then on the app side, it's like, okay, well, how do we take the data, take the intelligence, take the takes, and everyone who's providing that intelligence, and help to package it and format it in a way that is much more digestible and usable than just reading it on a screen. I think that is, I think that's ultimately where we are, and it's this messy middle that I think the intelligence is right now. But going on both sides, I think that's what is ultimately providing the most value into the future.
Yeah, no, I totally agree. And I think the good news for our industry, I think there are new primitives and new markets that are opening that are crypto adjacent. So one of the big sort of hot topic areas for us is really prediction markets. You probably saw, obviously Robinhood, what I thought was just a blockbuster revenue top line number on prediction markets. I was quite surprised that now it surpasses, stock as well as crypto trading fees, and only second to derivatives. So I think prediction markets, because it's got a linkage to crypto and blockchain, at least for many of the prediction markets. So I think, the good news is that there are crypto adjacencies that are opening up that are quite exciting. I think that gives me a lot of hope for new growth areas for the industry. I think secondly, there's a story I have a good friends at Goldman Sachs. Obviously, I worked there, many years ago, and a partner there who's on the wealth management side. She's like, man, Steve, I can't get my son who's in high school to be excited about stocks at all. It's like all he wants to do is talk about, crypto. And this is a partner at Goldman Sachs who, is in charge of the wealth management business or an aspect of it. So I spoke to him, and he's like, yeah, I mean, stocks are so boring. It's like there's not enough leverage. And why I mentioned this is that I think your previous guest also mentioned the size of that. We talk about perhaps $100 trillion of inheritance that are going from, Gen X to the millennials and Gen Z. And this, the 20s and the 30s now, and even younger, are very much crypto native. And so we talked about like using leverage and being able to be, sort of the DeFi primitives that crypto is very familiar with. And, whether that's a perp or, other kinds of options, this idea of a sophisticated kind of consumer retail that understands deeply leverage with this onslaught of $1 trillion of inheritance, I think makes somebody like the block or the rollup very relevant and increasingly relevant as those audiences continue to grow up and have more wealth. And the traditional media companies, I think, are not very well prepared for that. So, I think that the future is bright in my view, despite a lot of the gloom that infects some of the markets today. That I think that if we can really serve that customer give that customer real good insight of value. If it's breaking news, get it to them as fast as you can. If it's insight, give them something they've never heard before. It really helps. I think that's where we really win. And then with the institutionals coming on, I think the block's in a really good place. Some of the biggest names that you know are in the space that are either banks or asset allocations or investment managers are the block's customers. So we're really doubling down and speaking to them. What more can we do to help them understand the market and do their business? So anyway, sorry for that long rant, but I'm actually quite excited about those sort of new markets opening up for us.
Yeah. And I mean, I think you mentioned prediction markets, and that is, I mean, a fantastic, thing that we're going to continue to see. The chat is talking to me and they're asking, they wanted a Zaki, and they're curious, with your experience at Zaki, what is it going to take to bring NFTs back?
Wow. You know what? Zaki, what a fantastic group of folks, very creative. I got to know the four co-founders, obviously, when I joined. Look, I mean, Azuki's strength was about quality of art as well as the strength of community. And that was sort of my first crash course on crypto. Starting at a NFT company, you get thrown into the deep end of the pool real quick. But yeah, look, I mean, NFTs had its sort of from an asset and an appreciation perspective, I think it's seen its highs before. I think going forward, I know Azuki, who I'm still obviously closely in touch with, they've pivoted to like a trading card game, for example. They've also launched anime.com, which is more of a Web 2 experience. So I think a lot of the promise of NFT, the community and the IP, that's unfortunately hasn't played out in the way that I think everybody hoped it would. But I think the strong players, the blue chip NFT companies, like an Azuki or a Pudgy, and some of the strong communities that have found different ways to grow and continue to, enrich the communities in different ways, I think they're going to still survive. As far as a big Azuki, I think they're much more affordable now. So I sport an Azuki on my Twitter account and where PFPs are, and I'm still very proud of my time at Azuki. So I'm a long-term holder of that NFT, and I hope that even though it may look differently, that there will be a comeback, but probably in a different form than what we saw 3-4 years ago.
Yeah, absolutely. And I think we're actually seeing, and I'm hearing things, that is where the DTCC and tokenization could be headed as well, is using NFTs as part of their technology to help with tokenized equities and keep track of the custody format. Aside from the NFT market, just last word on the market generally. There's kind of like there's two wolves. One is calling for another leg down, a flush, final liquidation, capitulation. Others are saying that we're in apathy. It's just a matter of time before we resume upwards. Where do you stand?
I do not make predictions like that. Certainly not that but look, I don't know if we've all still have gotten to the bottom of what happened in October, and I think there's still a lot more to be found out about that as well, for example. And I think the part about crypto, I've met some of the most brilliant people that I've ever met in crypto. And I think that a lot of what we do is very complex, and there's sort of macro things that we didn't really expect. I know a few days ago, we were talking about internally about the Mythos, kind of security vulnerability on cryptography as an example, sort of like a few black swans out there that we don't know what we don't know. And I know in your previous guest talked about sort of security as an important topic overall. So look, as a media company, the block will be right there. We can promise you that when the biggest issues or insightful things are needed to be sort of shed light on, we'll be there. That's what I can promise you. I have no idea whether we're in the middle of another, kind of bear that'll last a long time, or we're just in general apathy waiting for the next catalyst. I don't know. you're a venture capitalist. Maybe you should give us some advice. But my job as a media company, news coverage with what we do, we'll be right there to help everybody kind of understand as best as we can, I think.
Beautiful. And one last question for you. I'm just curious if you think we play this bull or bear game with our guests, and I'm just curious from a media perspective, because obviously we do a lot of these with regards to the markets, but media platforms that you're bullish or bearish on, is there maybe it's legacy media, mainstream media that you're a little bearish on, or crypto media in particular that you're bullish on? If you could shout out a couple platforms here, what do you think?
Well, look, I mean, I think there's some businesses out there, when I was still kind of in traditional media, a company that came out of nowhere, but has really sort of solidified its position is The Information. If you're familiar with that outlet, they sort of went to the newsletter route when people thought you can really make a business out of newsletters, and they went super premium. I think that's an interesting model. I think Politico Pro, for example, has really changed from just a media, news coverage to really having a sustainable business model. I think going forward, it is that, obviously Bloomberg, kind of as the OG in financial news, I think they are a great partner of ours, but also just like everybody are going through a self-evaluation, as every media company should, of how customers interface with their data, et cetera. So I think there are elements of those that work. Obviously, some of the newer outlets that are more personality driven, that combine content with transactions, I think are very interesting business models. That it's not just delivering news, but also it has a tie into transactions. But I'm not sure that we have solved what is the next media format going to look like that will become $1 billion company. Hopefully the block will be a strong contender in that. But yeah, I think those elements that I mentioned of The Information or the Politico Pro or Bloomberg, there are elements there that I'm hoping to combine into like how the block is positioned for the future. But we'll find out together. I think we're going to take some chances with some interesting features and new partnerships that we're very excited about, and really figure this out, while the world is massively shifting and changing, underneath us.
Yep. Very, very cool. Well, Steve, thanks for spending some time with us. Thanks very much. And it's fun when worlds collide like this. Can't always talk shop on the media front with everyone here, but it's good to take an extra zoom and double click into the media space with someone who's been around the block. If you like that pun, yes. There. And very excited for the future of fintech media, crypto media, digital assets, and would love to do this again soon. Whether you come back here, we do a little guest post on the block. Let's continue to do some more of these mashups.
You come on to our show. We've got
a lot of fun.
We've got a show called The Starting Block that we just started with Garrett Jenkinson, and so maybe we should return the favor and have you guys come on some of our platforms soon.
Love it. Absolutely love it. Thanks, Steve.
All right.
We'll see you again soon.
Thank you. Bye-bye.
Cheers. Bye. There you have it. That was Steve Chung from The Block. Guys have been around in crypto media for a long, long time. So very cool. Obviously, intelligence is premium these days. And man, I think it's going to take a little bit more than just news. There's going to be tons of takes. You see prediction markets getting into news. You've got obviously the frontier models that are able to access all of the data sources. So where are they pulling? Where does a lot of the revenue come from? These are becoming the questions. We're feeding the frontier models, but then they're feeding us intelligence. So it's happening. It's really happening. We're really doing it. Guys, thank you for rocking with us. I think we only did 3 streams this week, but we had an absolute doozy on Wednesday. And then obviously tons to cover today. Another fantastic show. Give me some dubs in the chat, guys. Come on. What a fantastic week. Market sideways. So we got to have some fun somehow. Where are we closing out the day? I'll also address Satoshi coming on the show. That guy wasn't Satoshi. He did have a $3 million Richard Mille on his wrist. That was real. However, he claimed to be Satoshi. I kept thinking he was going to say it was a joke the whole time. There's a lot of comedians and magicians in Vegas. At a certain point, when I realized he was not kidding, it felt like I was dreaming. It felt like someone had put drugs in my coffee. I was just totally, I was cooked. I was just my mind was just like, what is happening right now? I had no idea that this guy seriously, I mean, I looked into his eyes, and typically, like, you can typically do like a pretty good judge of character. Like, you look in someone's eyes and you can usually tell whether or not they're lying. But the thing is that this guy, it was like this guy like believed it himself. Like, he had convinced himself that he's Satoshi. And he had a couple like other, and I think you guys saw some like, there was some groupies that he had that were pretty brainwashed. Don't buy anything that guy's selling. Yeah. I hope everyone got a good laugh from him coming on the show. We're not going to talk to any more fake Satoshis for a while. Guys, thank you for rocking with us. Give me some W's in the chat. And we're going to keep rocking. Yeah, new type. Check out the end of that Vegas show from Wednesday. Tell us what you think about that guy. Much love. And we're going to have you guys on just an absolute tear here soon. We're part of the transition. Bear market's ending. Bull market's starting. Equities are rolling over. And we're going to keep things rolling. We're going to keep having fun. Hope everyone has a good weekend. Give me some W's in the chat, guys. We're going to see you next week to see what happens. Weekend pump. Let's get a weekend pump going, guys. Fantastic show, as always. We will see you next week, and appreciate everyone. Much love. Thanks for rocking with us here at The Rollup.